Like and subscribe to my channel and click the bell icon to get new video updates.
How remote work has impacted real estate values. The boom in remote work during the pandemic has undoubtedly fundamentally changed the way we work. For example, a survey conducted in 2021 found that over 75% of workers would happily forego a pay rise if they could work flexibly more often than before COVID. Indeed found the latest work monitor from staffing firm Randstad finds that in the current macroeconomic circumstances, this is not the case with the changing demands on employees that began during the pandemic. Workers still want flexibility, values, and a good work-life balance, with 61% of workers reluctant to take a job if it interferes with their work-life balance. Impact on real estate. As this trend unfolded, there were significant concerns about its potential impact on cities, as people feared that if we could work from anywhere, the city would leave and find somewhere cheaper and quieter to live. While I've never really thought of that as a realistic concern, not least because there's a lot more that draws us to cities than just work. The trend toward more remote work or hybrid work is having an impact on corporate real estate. Research from Columbia's The Business School points out that the shift to hybrid working has affected not only the commercial real estate market, but even the housing market itself, with rents in the suburbs rising along with house prices relative to urban locations. The pandemic and its aftershocks have the real estate investment changes the landscape, both in the short and long term, explains the researcher. One of the longest lasting effects of the pandemic will be the wider acceptance of remote work. In a recent article, I examine whether remote work might have an impact on inflation, and Columbia Research suggests it may have a similarly significant one. Could have an impact on equity and debt markets. They explain that throughout human history, there has been an intrinsic connection between the places we live and the places we work. The rise of remote work has disrupted that relationship, and they believe this will impact not just the real estate market, but society at large. The researcher reviewed data from both the 3 years before the pandemic and the 3 years since the pandemic began to now, while also examining data from the 20th and 21st centuries to try and understand what the possible impacts of the working from home could have on everything from real estate appraisals to the structure of cities. This data included national remote work policies and rent changes in 30 metro regions, the proportion of remote job postings on Indeed job sites, and migration patterns both globally and specifically for New York City. The analysis shows that there has been a significant drop in office use during the pandemic, which is understandable. What is interesting, however, is that this decline has lasted much longer than initially expected, and there is little sign of a reversal. The author highlights that around 250 million square feet of new office leases were signed annually before COVID, but that number fell to just 100 million in the first half of 2022. This has had an understandable impact on office values, which have fallen significantly and remain below those of 2019. The author believes these valuations will remain below this level for the next decade. Office simulations figures that account for remote work rates show that the value of all office real estate in NIC fell by more than 40% in 2020. Projections for 10 years after the shift to home working suggest office values in 2029 will average 39% down from 2019.